Hello everyone, my name is Rebecca and I am your insurance lady. This is part 3 of a series of videos where I break down insurance concepts to help you to understand homeowners policies so that you can pass your property and casualty, personal lines, or claims adjuster insurance exams. In this video, I'm going to go over the section 1, the property section of a homeowners policy. Now, just to recap from the previous video, there are 7 different homeowners forms. You would get a separate homeowners policy through one of these forms. Some are better than others, some vary in costs, some are designed for specific units or structures. For example, a renter's policy is going to be issued with an HO4 form, and a renter's policy has specific coverages that only renters would need. So to go over the coverages here, you have an HO1, which is a basic form, an HO2, which is a broad form, and an HO3, which is a special form. HO1, HO2, and HO3 are traditional homeowners policies. HO4 is your renter's form, the one we were talking about. HO4 does not provide coverage for the structure, which is coverage A, or other structures, which is coverage B. It will provide coverage for your personal belongings, also known as your personal property, and it'll provide coverage for loss of use. The HO5 is your comprehensive form. The HO6 is your condominium form. And then the HO8 is your modified coverage form. Now, if I were to build you a homeowner's policy, it would likely consist of 2 sections. Section 1, your property coverages, and Section 2, your liability coverages. It's important to understand that everything in Section 1 is coverage pertaining to the property. If there is no damage to the property, then Section 1 would not apply. Section 2 is the liability coverage. This coverage is designed to cover the insured. It pays others for liabilities because of the insured's negligence. Remember that this coverage does not pay the insured, it protects the insured. So next, I'm actually going to go down the list of coverages and talk about A, B, C, and D. Now, coverage A is going to provide coverage for the home and any structures that are attached to the home. For instance, under coverage A, damage to your home and the garage would be covered under coverage A only if the garage is attached to the structure. However, if the garage is not attached to the structure of the home and it is an unattached garage, it is not considered attached to the home and it would not be covered under the coverage A of your homeowner's policy. Now, coverage B covers other structures that are not attached to the home or dwelling. For example, on that last slide, the unattached garage would not be covered in coverage A, but instead would be covered under coverage B, along with sheds, fences, and any other structures that are not attached to your home. Except for barns. Be careful with those questions because a barn is a farm structure, and a farm and its structures are not covered in a homeowner's policy. So there may be a trick question pertaining to barns under coverage B in your insurance exam. Now, coverage C covers your personal property or contents in your home. These are your belongings, your personal items. Coverage C will cover personal items for the insured. It's important, you must remember who is the insured. The insured consists of you and the residents of your household who are your relatives, anyone in your care under 21 years of age, your children away at college under 24 years of age. Remember that roomers and boarders are not going to be covered on your homeowner's policy. So property of roomers and boarders are not covered under coverage C, personal property. So the next coverage is coverage D. Coverage D covers loss of use or additional living expenses. Loss of use is an indirect coverage. It would apply if a home is not livable due to a property loss. For example, if your ceiling caves in from a major rainstorm, you probably do not plan on sleeping in your home while that ceiling is being repaired and exposed. You're probably going to get a hotel or rent another home while the damages are being repaired. Loss of use would pay for those additional living expenses. So HO policy structure, you have Section 1, your property coverages, and then Section 2, your liability coverages. In this video, we went over Section 1, your property coverages. Section 1 includes coverage A, which is your dwelling, your structure, your home. This will cover your home and anything that's attached to your home, such as a garage that is permanently attached to your home. If your garage is not attached to your home, it would not be covered under coverage A, the dwelling structure. Coverage B is your other structures. This is coverage for structures that are not attached to your home, such as the unattached garage, and coverage B would pay 10% of coverage A. Now, coverage C would pay for your personal property, your personal items, your personal belongings in your home. Coverage C would pay up to 50% for your personal items that are damaged, and that is up to 50% of coverage A. Coverage D is your loss of use or additional living expenses. This is an indirect coverage, and it will pay for additional living expenses incurred due to a covered loss, such as hotel stays and any additional items that have to be paid while your home is being repaired. Coverage D, loss of use, will pay 30% of coverage A. All right, thank you very much for watching my videos. This concludes part 3 of my homeowners video. I do want to thank you all for viewing my videos. If you liked it, please like and subscribe. If you're looking for additional material to help you through your insurance journey and testing for your exam, please check out Kaplan Financial. I do partner with Kaplan Financial, so I have left the link in the description area. And in that, if you use that link, you do get a 10% off any Kaplan products at Kaplan Financial Education. Thank you again. My name is Rebecca, and I am your insurance lady.